This is your LMAX exchange technical update for Monday, September 11th, 2017. Euro dollar. So the euro is pushed up to a recent 2017 high just this last Friday, above the previous high at 2071, which sets the stage for the next upside extension of this market to a measured move in the 123 area. At the same time, it is worth noting that technical studies are looking extended on the weekly chart, and so this does warn that additional upside could be limited in favor of a more significant correction to the downside, but we would need to see a breakback below 118.24, the low from August 31st, to strengthen this outlook and accelerate declines. Sterling dollar. Cable is traded all the way back up and is closing in on a retest of the 2017 high that was seen back on early August at 132.68, but we have seen a really nice run out from that previous resistance turn support at 127.75 over the past several days, and that could suggest that additional upside could be difficult here, and the market could once again stall out even if it does retest and just take out that 32.68 high. If the market wants to continue higher and can establish above 132.68, it would open the door for fresh upside towards the next objective at 135. If, on the other hand, the market isn't able to establish a close above 132.68, it could warn of more choppy consolidation in the days ahead and for the possibility of a rolling over back down towards that previous resistance now turned support area in the 127.75. Dollar yen. Dollar yen has broken down below critical support at 108, and this does open the door and set the stage for a possibility of a more significant downside move towards a measured move in the 102 area over the coming weeks. At the same time, if the market is unable to hold below 108 on a close basis, it could suggest that this breakdown that we saw last Friday was a false break, and the market is going to be supported in favor of more choppy range trade, ultimately opening the door for a push back towards the 114 to 115 area. So pay attention to 108. If the market holds below that level, there is risk for a more significant decline down towards the 102 handle. Euro Swiss. Euro Swiss has been confined to a choppy consolidation over the past several days, but ultimately the breakout that we saw in this market back in July above 112 was significant, as it sets the stage for a more pronounced rally in this market beyond 115.39 and towards that psychological barrier at 120 further up. Look for any setbacks in this market to be very well supported into that previous resistance now turned support at 112. Aussie dollar. Aussie pushed up to a fresh plus 2-year high on Friday, with the market rallying above 80.66, that previous high that we had seen in place back in July, late July. This does set the stage for a more significant extension up towards a measured move into the 82.50 area. At the same time, with technical studies looking a little stretched and the market unable to establish a close above that previous high at 80.66, it does warn of the possibility for a topside failure up here and a resumption of declines back down towards some key support at 78.08. Dollar CAD. Dollar CAD has been in an intense downtrend over the past several months since this market topped out by a 2017 high just shy of 140. The market has collapsed down towards the psychological barrier at 120. Having said that, technical studies are quite stretched here, and there is risk for some form of a meaningful corrective bounce before the market considers the possibility of a resumption of declines. Look for the market to break back above 122.40 to confirm the onset of a significant correction, opening the door for a potential move back towards some key resistance, which now comes into play at 127.80. Inability, however, to establish back above 22.40 will keep the immediate pressure on the downside for a break below 120 and possibly down deeper than that. Kiwi dollar. The New Zealand dollar has seen a bounce in recent trade, with the market rallying back up above 73, but overall it looks like this market is in the process of topping out after putting in a plus 2-year high above 75 several days back in late July. Look for the market now to be seeing a correction here in favor of a lower top below 74 and resumption of declines below 71.32, that recent low, which would expose a drop back down towards the 2016 low, which is also a range low area in the 68s. SPX 500. The S&P 500 has rallied back up in recent trade and is now consolidating just below that record high that was seen back in early August at 24.91. At this point, it's difficult to determine whether the market is going to continue with its uptrend, breaking to fresh record highs beyond 2,500, or if we're seeing the market in the process of topping out for a more significant structural shift to the downside. A break back below 2,400 would ultimately be required to confirm as such and set up the possibility for this major bearish structural shift. Until then, the pressure remains firmly on the top side, and the risk can't be ignored for the possibility of a breakout to fresh record highs beyond 2,500. Gold continues with its impressive move and is now within a stone's throw of a retest of the 2016 peak at 1375 further up. Look for any setbacks in this market to now be very well supported into this previous resistance turn support area around 1300, while ultimately only back below 1200 would compromise what is a highly constructive outlook for gold. Eventually, the market has the potential to break out and clear 1375 for the next major upside extension towards the 1500 area further up.